What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. So, the most predictable thing that could have happened happens. All you needed to do was draw this line here at roughly $80,000. This was where our previous support was. And also, this is where we got our major resistance as predicted. So without being proven otherwise, we can comfortably say that we're still in a downtrend right now. As you can see, we have a series of lower highs and lower lows. Will this be a new lower low as well? We'll have to see, but I think it's actually quite likely. As you can see, the downtrend is very, very aggressive at this point. Obviously, it might take some time, but there is a good chance that we're going to get slightly lower levels at the very least. This is a huge, huge support area. So it could be that the next low is not that much lower than the previous one, but we'll have to see. Some of you guys remember that I opened a long position with very low leverage when we were back here. Initially, I was thinking whether I want to keep that as a macro long position or perhaps close it out if we get a major bounce. And we did end up getting that major bounce. So I did end up closing out that long position at roughly these levels, because I did believe that a scenario like this was extremely likely. This was essentially a picture-perfect false breakout because first we got this big green candle above it, but we couldn't hold it above those levels, and then we got a very large red engulfing candle that took us right back down to those lower levels. And then obviously once that was confirmed, we got our further drop to the downside. None of this is surprising because timing-wise, we should have quite a few more months of bear market left. And obviously, this is what happens in bear markets. You have these continuous lower highs and lower lows. And at some point, you bottom out, the trend starts to reverse. Maybe you get some divergence. But obviously, so far, this is not what we're seeing just yet. But I do believe that we're going to get some really juicy levels very soon. Next, let's look at some of our other indicators and charts. Let's start with our power law fitting chart. As you can see, we have this magenta line here that we are rapidly approaching, but obviously this is not the last deviation line here. You can see that we have this purple line quite a bit below that. And this is where we typically bottom out in bear markets. We can even sometimes go quite a bit below it, but on a very short-term basis. So what is the optimistic scenario? Well, you can see that in this market cycle here, we actually did get a bounce off of this magenta line, then got to the red line, then bounced back off of this magenta line again, and then went back higher. And only much later did we actually come back down to this purple line. So the optimistic scenario would be something similar here. Maybe we are actually close to a bottom and then we can have some major move to the upside before revisiting maybe the purple line again, but obviously this typically does not happen. Timing wise, you can see that the spiral chart is finally nosediving here after peaking out, and this is to be expected. And also when you look at the valuation here, we're finally getting quite a bit of green here, but obviously the bottoms typically are dark green. So this would be the 60% deviation line from the median power law. Next, let's look at the CME chart. So as you can remember, we were talking about the CME gap for quite a while, and we got that beautiful fill just above the actual gap, and then we came straight down again and continued that downtrend. Next, let's look at DXY versus Bitcoin. As you can see, the dollar has just been stabilizing here, moving up and down, but it hasn't taken a clear path just yet. We'll have to see whether this is actually the bottoming process or whether we will actually go down for that last leg. When looking at the unemployment rate, you can see that it is coming down, which is good, even though they are cooking the books and many people have to have multiple jobs just to get by. But there's nothing catastrophic here just yet. Everything's going as expected with the federal funds rate as well. It's coming down very slowly in a methodical staircase pattern. The Fed is really hoping for that soft landing, and let's see if they're going to be able to pull that off. Next, let's look at a chart we haven't seen in quite a while. This is the Bitfinex longs chart. As you can see, it is actually quite possible that we are in this phase of the cycle where the longs are absolutely skyrocketing. People are getting more and more confident in actually longing Bitcoin, even though the price is starting to drop quite drastically here. So when did the longs peak out last time? As you can see, it was here. That was actually the bottom before the true bottom. So something similar could happen this cycle as well. We could peak out relatively soon, and then by the time of the true bottom, we could actually still be stabilizing here in terms of longs, and then the longs will finally start dropping when we actually confirm our bottom and move back to the upside. Even though the inverse correlation of this chart is not perfect, when looking at a very broad picture, it is quite a good signal when we are extremely elevated here with the longs, because this is typically exactly where the bear market bottom is. Next, let's look at the S&P versus Bitcoin. As you can see, there isn't much of a correlation right now. The S&P is still doing pretty strong. As you can see, the top for Bitcoin was over here, and the S&P still rallied quite a bit after that. Only now do we see some sort of small drop. But this is quite normal because the cycles of Bitcoin and the S&P are quite often desynchronized in a way. Even though they do follow 4-year cycles, sometimes the S&P bull markets typically lasts 10, maybe 15 years. Sometimes you do see S&P corrections during Bitcoin bear markets, but not always. Next, let's look at some news. Here's the Bitcoin power law being covered in mainstream news. This is great, guys.
The banks have taken their mask off and their gloves off, and they've really come out very forward-facing against the bill, and they really are the last standout in terms of the group of organizations who have yet to adopt this technology, but it's coming. You can't hold back innovation. You can't put the toothpaste back in the tube. The technology is out there. It's going to strengthen the banking system. They're just being very slow and apprehensive to adopt it. It is still very early, and so many people are like, it's late. How is it that Bitcoin's already over 70,000, 80,000, and I haven't gotten in yet? It's not too late to get in. Bitcoin follows the laws of nature. It follows the power law, and scientists and physicists that are studying the correlation and the historical price of Bitcoin are projecting Bitcoin to hit $1 million within 8 years. It's growing not exponentially, it's growing according to power law. It's a network. It's going to continue to grow, and we're seeing with all these big updates that we're talking about, regulatory clarity. You have Wall Street coming on board. All the brokerages are now allowing crypto trading and recommending allocations. We have so much demand coming into the space, and of course, supply is fixed. So only one thing can happen in that equation, and it is still.
We also just had a whole bunch of crypto liquidations as expected with such a massive crash. People are blaming different things such as the US-Iran conflict and Michael Saylor's surprise Bitcoin sale. And people are asking me whether this is what caused the crash. In reality, it's just the market structure, and these things just often align. As I've explained many times before, people often try to find news to justify price moves, but in reality, that's a fool's errand. You should actually be thinking about this in the opposite direction. Was this move already baked into the charts, and are these news a result of the price action? For example, Michael Saylor probably understood that it would be a better idea to sell a little bit of Bitcoin right now compared to selling it later on when the price is going to be even lower. Next, let's look at Bitcoin versus gold. As you can see, Bitcoin is dumping against gold, and this is to be expected because it is a more volatile asset. But we're still significantly higher than where I decided to rotate out of precious metals, so everything is still good in that regard. It's not like the precious metals are doing well. In fact, they're still in a correction right now. It's just that they're dropping a little bit slower. And obviously, silver's chart looks like a horrible bear market after a parabolic blow-off top. When looking at the crypto fear and greed index, you can see that we're currently in extreme fear, which is very logical, and this is also completely normal in bear markets. We can probably oscillate around these extreme fear regions for quite a while before our actual bottom is in. Alright, to finish off, let's get back to the charts. And as you can see when looking at the moving averages, this was a textbook rejection off the 200-day moving average. We got like 1, 2, 3 rejections off of it before getting our catastrophic collapse. Obviously, the bulls are still hoping for a higher low, but I find that to be less likely in this scenario. When looking at the weekly moving averages, we do have the 200-week moving average right below us, so this could offer some support. but we have obviously violated this in some previous bear markets. As time goes on, this moving average will matter less and less in reality. This is probably the beginning of the end game now. We're probably entering the last phase of the bear market. Yeah, it's horrible to look at our red portfolios, but this won't last for too long. Instead, try to make use of these opportunities. I'm personally gonna put in some very low leveraged longs once we get below 60k, because anything below 60k is a steal for me. So yeah, hopefully we're gonna get those levels. I'm gonna load up, and yeah, at that point we can see how to proceed. Obviously nothing is guaranteed, but if we do, for example, drop to the current bottom power law support, which is roughly at $58,000, and you set up a 1x leverage long with Bitcoin collateral over there, you would have a very, very low liquidation price. It would be below 30k, which obviously is a level I don't think we will ever reach. You never know with these markets, so obviously don't take this as financial advice. I only risk what I'm willing to lose. Alright guys, that's it for today, and also make sure to join our free Telegram group so we can have some nice discussions over here, and see you in a future video guys.